Hi everyone and welcome back to today's Morning Report. Charts on Wednesday the 23rd of March with me, Rich Perry, market analyst at Hantech Markets. Let's look at dollar yen, and we've had this dollar strength in the last few days and that's continued today. Look at this turnaround though, really interesting turnaround. We had initially on the back of those terrorist attacks in Brussels, we had the yen strengthening, which was pulling dollar yen lower. Hit a low of 11.35 and then rallied pretty hard actually since then, 130 140 ticks up from that level, and it's continuing this dollar unwinding story, isn't it? Now the question is this playing out as a dollar recovery with any sustainable move? I don't necessarily think it is. I still think we're still playing out this range that I think is going to break to the downside. I think this is just a near-term sort of uptick within the range, that a counter trend. Well, wouldn't say counter trend. Sorry, I say counter trend because I think it's going to be a downside break, but I think it's just counter to the view that there is going to be a strengthening yen here, and you'd sort of point towards the RSI. I've got the crosshair on at 48, which was the reaction high within the rally that we got a couple of weeks back. But I think that what we're seeing is just an unwinding move, and I think ultimately it's going to find resistance and then start to pull lower again. You wouldn't want to necessarily see that RSI on the daily chart above that 50 level, but here we go on the hourly chart. We're seeing sort of more positive near-term momentum, but not massively positive. I still don't think. I think it's just sort of retracing that move. Now what we have got is a breakout on the upside above not only the 112.15 level, which was a pivot level, is again a pivot level. Look at that, yesterday and also today. So that is a level to watch, but also 112.60, those old lows. You've broken through that, so that pretty much now reopens your reaction, your pivot level, 113.15. That has been in place through February and March. So 113.15 is that level, and I would sort of look towards that being a fairly decent point to which you start to thinking about selling. I mean, I said in the morning report I thought, I didn't really expect this rally to go above that sort of resistance band between 12.15 and 12.60. It has done, so it's gone a little bit further than I thought it was going to be, but you've now got that resistance in place at 13.15, and I think that is a level at which you can start to think now about the next selling opportunity. I think if you got a move below, just quickly come back to the daily chart accidentally. I think if you saw a move below or back below 112.15, I think that would be your signal. So you'd be looking out for that perhaps. Although you've still obviously got about 50 ticks worth of downside before you get to that level. So you are still, in my opinion, looking out for the sell signals, and it'll be interesting to see if they happen or not, because I think that this recovery is counter to what I believe is going to be further pressure to the downside on this range, and I think its rallies are still going to be seen as a chance to sell. Certainly, looking at the momentum indicators, that is what I'm getting. So this is a near-term rally within what I see as a medium-term sort of bearish phase. Anyway, I wish you good luck in your trading today, and I'll speak to you later. Thank you.